This morning we have Scott Bauer, we have the CEO of Prosper Trading Academy joining us. Let's bring him in to take a look at some of the recent trade data. Scott, welcome. We have goods and services trade data. Good morning. Probably not necessarily the most closely watched data when you consider some of the other economic data points that we have at this point coming our way here today, but they were looking for it to come in around negative 66.10 billion. It looks like a little bit larger of a gap than expected. This has been a focal point here as it continues to increase, down 67.10 billion. What are you seeing in terms of market reaction to, initial reaction to this number, and your thoughts here in terms of this trade balance widening, continuing to widen at extreme levels at this point?
It does continue to widen, which, it's kind of getting, let's say, blown under the covers a little bit because it's not that closely watched of a number. However,
Right.
it is a number that's very concerning, Ben. Market, I'm looking at it right here. The market reaction, pretty timid, not really much to that, but it is certainly an ongoing number. We don't want to continue to see that.
Scott, what do we want to see right now in terms of economic data? I mean, obviously, the jobs report, is it the focal point? I mean, consumer trends, is that what we're looking for? I mean, where is your focal point in terms of some reassurance right now that things are back on track in terms of getting better? And we're not necessarily just in this gray area anymore after reopening and seeing some real strength and then kind of slowing down as we saw closures again and uncertainty. I mean, right now we're looking for some real reassurance. Where will that come from? Is it the labor market? Is it consumer trends?
I really think it's consumer trends now. We got the last number before the election, the monthly jobs number, which, by all intents and purposes was not a bad number. I mean,
Yeah.
it's so hard to say it, the number that we got was not bad, but it wasn't really bad. So, the jobs number is probably not going to change a lot before the election. And it's, to me, all going to be consumer trends, consumer sentiment. What is there out there? Is there a shift going on now with the increasing shutdowns or lockdowns that we're starting to see? Are consumers starting to get a little bit spooked out? Are they going to keep things closer to the vest right now? So I want to see any pattern like that, not only going into the election, Ben, but quite frankly, going into the holiday season, and what sort of shifts we may see in consumer spending going into online sales, going into, brick and mortar stores for the holiday season. We're 6 weeks away from that. Yeah. Ordinarily right now, we would be talking about the Christmas season, the holiday season. And so far, there's nothing about that yet.
Yeah, you bring up a good point there. Let's talk a little bit about the president. And I was top story this morning. Basically, he's returning home back to the White House. I'm thinking about some of the efforts that he received in terms of trying to combat the virus. It really seems like, I heard Oliver mention this yesterday, a real vote of confidence for some of the drug companies. I guess I'm wondering, though, if the president isn't really impacted too much by this. I guess I'm wondering, how much of a focus do you think investors will continue to have on some of these headline news stories that have rallied the market and kind of boosted confidence related to vaccines? I mean, ultimately, if the president can work his way through this, I mean, some of the younger population obviously a lot less vulnerable, and ultimately, I mean, maybe this will move some of the focus away from the vaccines and just kind of getting back towards normal.
Sure, and first and foremost, let's hope and pray that he is well and that the recovery continues to be just well. But I think that the jury is still out because the doctors don't know, the scientists don't know yet. Because and I'm not a scientist, I'm not a doctor, but from everything that I've read, the smorgasbord of, let's say, cocktails that he has received or drugs that he has received is unlike probably anybody in the entire world has ever received. So we just don't know yet. Is it encouraging? Sure. It is absolutely encouraging, and that's probably why we saw the nice pop in the market yesterday, and we may see follow through today. In terms of looking at individual drug companies and if investors want to hop on, I would be very, very cautious about that. I'd be very cautious about that.
Scott, let's talk about how all of this feeds into, or seems to feed into, rates, which are inching higher right now. The dollar not necessarily reflecting that. I mean, we saw it reach up to that 95 level but fail. I've got my eye on the 93 level. I think below that retarget's 91, or that low that we saw. But rates are inching up here, and they're attracting some attention right now. This is amidst stimulus talk, which is starting to resurface again. We know how far Democrats and Republicans are in terms of the gap, 1.6, I think it was last we heard. What are you seeing here right now? What are you watching as far as the dollar? Is it selling off, even though rates are inching up, kind of back to where we were as far as some of the disconnect that we've seen over recent years?
Yeah, the dollar is selling off. You know, for the month of September, it had a really good month. It was up about 2%. It's down 3% for the year, but you had mentioned a couple levels there that you and I have talked about, you know, over and over and over. That 94 was kind of a shift level, and then anything below 93 is really quite bearish. Now, what we're seeing with the risk-on sentiment that we saw yesterday, yeah, that's all really hanging on the hopes of optimism around stimulus talks. And you know, is something going to get done? And there certainly seems to be a lot of pressure that something needs to be done. But that's why we saw that risk on sentiment. That's why we saw yields climb as well. In fact, you know, we saw the yield curve, the 1030, steepen to its, you know, widest in quite a while. I mean, we're seeing the 10-year now around 78, the 30-year around 160. Those are levels we haven't, you know, really seen in a while. I think it's short-lived personally. It's something that I'd really keep an eye on here. But, you know, let's take a look. You know, it's certainly optimistic. And the more optimistic tone out of Congress about a stimulus talk, the better it's going to be.
Yeah, it seems to be. Let's talk a little bit about Fed Chair Jerome Powell speaking today. I guess many would probably expect him to kind of echo comments as you were just talking about, how he's going to urge lawmakers to do more, but also make it very clear that if the Fed, if need be, they'd be willing to do more as well. What do you think one of those trigger points could be? I mean, we talked about jobs, we talked about some of the potential indicators that are providing the lift to the upside and reassurance, confidence, but what would one of those potential catalysts for the Fed to act more aggressively be? Would it be, again, some of those consumer trends that you were just talking about? Would it be more coronavirus numbers concerning levels back into play, concerns about shut-ins, or maybe would it be jobs starting to falter?
It's so interesting because, you know, one of the sectors that had really lagged was the manufacturing sector.
Big
but
time.
The recent numbers, especially the ISM numbers we got, were actually pretty positive.
Yeah.
So they did. So I don't see Powell really speaking to that. I see him really focusing on the consumer and really focusing on, you know, the cautious stance that we need to take about the virus spreading and how consumers are going to react. And I think that, you know, he's going to reiterate the stance that the Fed will do anything and everything they can to make the consumer feel comfortable, because the bottom line is the consumer drives this marketplace, and he or she has to feel comfortable. And, you know, like you just said, I think the Fed is, you know, he's going to say that the Fed will be there to do whatever they can to keep this market going, to keep the hopes of a stimulus going and keep the economy going so that the consumer does not start to, you know, fade off a little bit here.
Scott, last question. I'll let you get on with your day. A busy one, I'm sure. Reserve Bank of Australia, as expected, left rates unchanged, 0.25%. Seemed like the focal point was more on a labor market. They said the conditions have improved somewhat over the past few months. Unemployment rate is likely to peak at a lower rate than earlier expected. They said even so, unemployment and underemployment are likely to remain high for an extended period. Wage inflation pressures remain very subdued, and the bank is going to publish some update forecast next month. But I imagine they're in a similar situation as us in terms of focal points as far as what we've been discussing.
2 words: cautiously optimistic.
Okay.
I really think,
I hear you.
Know, and we watch the, you know, the Bank of Australia, because it's so closely tied to the yen, and you know, which obviously then, you know, feeds into the dollar. So we watch that so closely, but they're in the same boat we are. There's no question about it.
Yeah. All right. We have, expectations that if anyone's going to move next, maybe Bank of England to the downside amidst some of these Brexit concerns. Scott, appreciate you joining us here. Great look at the trade data, some of what's moving markets. Thanks to you, Scott. Really appreciate it. A productive fishing weekend, as I'm sure you saw on my Twitter feed. Ladies and gentlemen, Scott Bauer, the CEO of Prosper Trading Academy, joining us. And